Good morning, Neil.
Hi, good morning.
Thank you for joining us this morning to discuss our Q4 and year-end results.
Yeah.
The first question, can you tell us some of the takeaways of 2018 that you'd like to discuss?
Yeah, I mean, there's been a lot of really positive things done in 2018, which have been completely overshadowed by the unacceptable position on the mining project that we've had to deal with over the last month or so. There's also been headwinds in terms of the overall volatility within the oil and gas sector, and that's been amplified a little bit by some of the geopolitical stuff that's pretty well known. I mean, it sort of started in August and has sort of built up through the year, which is really affecting potentially some of our prospects going forward. But then, as I said, that's really overshadowed a whole bunch of really good work done by an awful lot of people. Infrastructure's performing well, nuclear's performing well, EDPM is performing well, and in fact, EDPM, recorded a margin of 11.2% in the quarter, which is industry leading. So overall, I think there's an awful lot of fantastic work being done by the vast majority of our employees, completely overshadowed, principally with the mining contract, but also some difficulties within oil and gas.
Any other milestones that you think are worthwhile highlighting?
Well, again, they've sort of been overshadowed a bit, but in terms of our rankings within the ENR, the ENR rankings in terms of global E&C firms, whether it's design or as an E&C company, we're incredibly proud of that in terms of the progress we made there. In terms of some of the other recognitions, in terms of Transparency International recognition, and in terms of we are co-chair of the Partnership Against Corruption initiative within the World Economic Forum. Again, we attended and co-chaired that just a couple of months ago. And I'm incredibly proud about the work that we do in that arena.
As we head into 2019, 2 months in, how are we positioned as a company?
Yeah, I mean, we're disappointed that, we're starting a little bit further back than what our original expectations are. But there is a lot of positives there. So, we've got an order book, a quality order book of 14.9 billion. In Q4 of 2018, we booked 2.3 billion of new work. And we've got lots of really interesting quality prospects. We've also given guidance in terms of our guidance for 2019, in terms of $2 to $2.20 for adjusted E&C, and then a consolidated guidance of $1 more in terms of $3 to $3.20. Mm-hmm. And of course, we've got billions of assets. We've got a clear capital allocation strategy, and there is no need for us to raise any form of equity. So from that perspective, I think there's a lot to look forward to, and there's a lot of positives in terms of where we're going in 2019.
Neil, in January, we announced important information about our mining sector. Would you care to elaborate?
Yeah, well, it's a mining contract in South America. And it's really disappointing because ultimately it's a very disappointing outcome in terms of, our team effectively making commitments to the customer where we don't have the same reciprocal agreements with the supply chain. So really it's an error that's been made where we are exposing the company to the differential between what's agreed with the customer and what we've actually agreed with our supply chain. Now, we've gone through that in absolute detail, so we are certain that this is an isolated case. We've gone through, we've looked at all of the costs, we've done peer reviews, we've looked at the risk control mechanisms, and we've double-checked on all of that. And ultimately, We've also met with the customer, and we have agreed that some of the areas where we could not recognise revenue because of the lack of a progressed agreement with the customer, that these will be put into a fast-tracked arbitration process. So we're still looking to pursue what we believe is our contractual entitlement through that process, but it is going to take a while, and we're not in a position to be able to record that from a revenue recognition perspective. But we have been through this top to bottom, changed personnel, put additional oversight in all of this, and we believe that we have bottomed this out.
I'd like to move to the oil and gas sector now. We've had some challenges. Can you please discuss?
Yeah, I mean, there's a couple of things going on in the oil and gas sector. I mean, if you look at, when we acquired our oil and gas group back in 2014, the oil price was a lot higher than it has been over the last few years. I mean, it's picked up a little bit in the last year, but it's still pretty volatile. And from a customer perspective, they are taking a bit longer in terms of their project approvals and their capital allocation strategies. So that's one piece. We're also involved in contracts where there has been changes, and where you get changes in some of these contracts, it is sometimes difficult to recognise revenue in a specific quarter. Mm-hmm. So some of the things within oil and gas, I would say, are more slight delays in terms of revenue recognition. And then the third piece really is the piece around the geopolitical, and I think it's pretty well known. I mean, we disclosed back in August the potential effects of the Canadian-Saudi relationship issue. And I think that in itself doesn't affect the work that we do today and the backlog that we do and we have today in terms of exercising that. And we've seen very little difference in terms of the short-term working off the backlog that we've got. But it does put a lot of uncertainty into the future prospects. Because Saudi have been pretty clear that they are looking, wherever they choose, to maybe omit us from bidding things that traditionally we would have bid. So when you take the forward-looking prospects and you roll that into our overall accounting and financial models, that's the reason that basically we thought it was the right thing to do in terms of taking an impairment within the oil and gas business.
Which contract wins stood out for you in Q4?
Well, there's been a number. Our EDPM sector secured a contract with the UK Ministry of Defence as engineering delivery partner for the defence equipment and support as part of the Aurora partnership. Our infrastructure sector implemented an earthquake early warning system on the Canada Line in BC. It's the first of its kind in Canada. On the clean power front, the John Hart generating station operations have been transferred to the new facility. The new facility has been completed and turned on in Q4. Our oil and gas sector signed an agreement with Perdaman for the development of the urea plant in Western Australia. Argentina's Ambolzi reactor was brought back into service by our nuclear team, marking the end of our life extension project.